How's it going, everybody? Welcome to the channel. Welcome back to the channel. Alright, today I'm going to talk about IPOs, and I'm going to answer three pivotal questions. The first one is, what's an IPO? The second one is my personal take on IPOs, and the third one is, how have IPOs performed since 1980? But before I do that, you must first remember to like this video, hit the subscribe button, and turn on that bell notification to always stay notified on the latest and greatest videos that I post. Alright? So now that we got that out of the way, let's get into IPOs. So what is an IPO? Okay, so an IPO stands for an initial public offering. Alright? I don't want to make this too complicated. I'm not going to get too technical here. I'm going to keep this simple. Alright? I'm not going to Wikipedia this or nothing. It's going to be plain Jane, A plus B type of thing. Okay? So an IPO is an initial public offering, which means, say a company like Lyft, which recently just IPO'd about a week ago, IPOs. So what does that mean? Okay, so Lyft is a ride-sharing company, but that doesn't really matter in this case. What it means is this company was private, okay? Which means you, me, and pretty much everyone you know could not invest in this company, all right? It is super complicated to invest in a private company, okay? Pretty much private companies are for companies you haven't heard of, all right? Now, there are some big companies that are private, but in most cases, they're generally smaller companies. So in a case like Lyft, it was a small company founded by two gentlemen, and they got people to invest in them, all right? So those investors took over a share of the company, a percentage of the company, all right? Now, the reason they would want to go public, as in list their shares on the stock market as an IPO, is because they would make a lot of money. And think about it like this. You can now sell to everybody. Therefore, everyone can buy your stock and you can make way more money. It's kind of a win-win for everybody, okay? To tell you this, when they IPO'd, their stock value went through the roof, okay? Like times 10. Their money also went up. At one point, combined, they both became billionaires, okay? When you combine both their money. Before, they were worth, a couple $100 million, but now they're, say, billionaires, okay? So that's kind of how that works. You can make a lot of money doing this, and that's what they did. So IPOs are extremely lucrative in that sense, all right? So now the shares are on the open market. They list on the stock exchange, say like the New York Stock Exchange. Now, retail investors, which is like me, you, and pretty much everyone you know, can now buy this stock, okay? It's open to the public, right? Which means it's now a public company, publicly traded. Now, there are some disadvantages to this. I'm not going to go over that stuff really. But, I mean, some advantages are, obviously, you make a lot more money and everyone can buy your stock. Disadvantages are, if you're Elon Musk, the SEC will come after you if you start doing some funky stuff, like possibly taking the stock private at 420, funding secured type of stuff. But if you really stay within the laws, don't break any rules, stuff like that, everything should be okay. However, you do now have to report your earnings quarterly, all right? That's just regular process now, where before you may have only have to post them once a year, okay? So there are some differences. The stock exchange tries to be more legit, so the rules are more intense if you become public. So that's kind of a quick pros and cons with that. But enough of that. How do I feel about IPOs, all right? Now, I feel some type of way about IPOs, and that is, I don't generally like them, okay? I've never bought an IPO, and more than likely I never will buy an IPO. This year has some monstrous IPOs coming out. Lyft already debuted, Levi's already debuted, but we still have Uber, Postmates, Airbnb, and more, all right? This is a jam-packed year for IPOs. It's one of the biggest, all right? Some big ones from last year were, say, like Snap, as in Snapchat. That was a big one, which has not done, too well. Unfortunately, it's down a lot, but some IPOs have done well. So it's a give and take, right? The reason I don't like IPOs is because I feel like the majority of them are bad. Most of the time when companies IPO, they are not making money. In Lyft's case, they lost about $910 million last year alone, 2018. That's not a great thing. That's something that would keep me up at night, all right? And I don't like to put my money into stocks that would keep me up at night, and that's stocks I don't feel comfortable with, all right? I seriously believe in staying in your area of competence, and if I don't feel comfortable with that stock, then I'm not going to buy it, plain and simple, all right? Possibly in the future, but I think they have to do a few things. If you saw my Lyft video, I go more into detail in that. The reason I also don't like IPOs is because they're kind of choosing when to sell to you, all right? They choose the date they IPO. They kind of choose the price they IPO at. It's written up by whatever bank they go with in the stock exchange, and they try and see where the float is and all this other crap. It's just a bunch of garbage to inflate the price, in my opinion, but that's kind of what they do. So most of the time, I believe when you're buying an IPO, you're buying an inflated stock, all right? That's plain and simple. Not always, sure. Obviously, Apple was an IPO at one point. Google, Amazon, Microsoft, Facebook, even Tesla, and Tesla still has issues, but it's well higher from its IPO price about, 8.5 years ago. So there are some perks. You can make a lot of money, all right? But most of the time, they're going to be a fail. Now, I have a little graph here that demonstrates this point exactly. Now, this shows you 5-year IPO returns based on first trading day. This is from 1980 to 2016. So it covers the first 5 years after a stock IPOs. So as you can see, the majority have gone down by 50% or more, all right? And that's 3,246 stocks went down over 50% since 1980. If we go to the next number, which is the second highest number on this list, and that is 1,397, and that's how many stocks went down 50 to 0%, all right? So not great, all right? That means they were negative in their first 5 years. They could have IPO'd during a recession. Yes, it's possible. There were about 3 in that time. So it is possible, however, they did not last 5 years. So they should have rebounded. The next is that's in the first 5 years, they've done 0 to 50%. That's pretty good. And that's 965 stocks. Pretty good. That is a decent number. The next number is 50 to 100%. So that's how many stocks gained 50 to 100%, and that's 627. Also a decent number, however, much lower than the other numbers above it. And finally, stocks that gained 100 to 200%. So stocks that have obviously done very well, doubled and then some. And that's 698 stocks. However, if you add up the 965, the 627, and the 698, so if you add up all those, you get 2290, all right, which is a decent number. So that's how many stocks went from 0 to 200%. Now, if we add up the 3246 and the 1397, which obviously we already know that number is going to be higher, it's 4,643, which is more than double. So just going on chances alone, that means you're 2 times more likely to pick a losing stock, all right? And that's just simple math right there. Now, obviously, there are some factors that can play into this, but generally, when a stock IPOs, it's probably losing money, okay? It's kind of how it is. It's tech companies. Now, even Amazon, when they IPO'd, was losing money. Obviously, they turned into a behemoth of a company and is obviously doing substantially better now than when they IPO'd. Yes, there are stocks like that, and you can make a monster profit. However, it's kind of gambling, in my opinion, all right? Now, there's always a lot of speculation on these stocks, and I like to see their financials when they come out, and I like to see how they trade. When a stock IPOs, you don't know how it's going to trade. Most of the time with IPOs, though, they're hyped up, so the stock price is going to go up on the first day, and then it goes down the next day and possibly even the next week, all right? So if a stock is really hyped up and, popular at the time, it's going to do well, all right? But at the end of the day, it's risky. You should always do your own homework. If you really believe in a company, though, then maybe the IPO could be right for you. However, I still suggest not buying on the actual IPO date, all right? If you want to trade, then yes, IPO dates are a hot topic for you. But if you're an investor, maybe you should hold off on buying it on the IPO date, see how the company trades, and then maybe invest some money into it. But that's just how I feel about it. Again, always do your own research, and if you feel comfortable in a company and you believe in it, then you have to remember, then you can buy it. Another thing I want to mention about IPOs is that there's something called share lockups, which means original investors who invested when it was private aren't allowed to sell their shares until a certain date. These people normally are up a ridiculous amount of percent, okay? Their money is now skyrocketed because the stocks are overinflated, and their percent is worth way more now, all right? That's just kind of how it works. If you own 50% of a $100 million company, well then, simple math says you got 50 million. But if you own 50% of a $1 billion company, you got $500 million now to your name. Substantial increase, right? That's kind of, the public-private thing. So you have to remember that in this share lockup, these people can now cash out once this 6-month period is over. So with Lyft, it's September 2nd, all right, of 2019. All right, so just be wary of that. There's a lot of people who are serial investors like this who decide to put a lot of money into stocks and then pull it out when they can. Just remember that they can do that and it can really sink the stock, okay? If a primetime investor that invested in a company on, say, day one, then pulls out now, it doesn't look good on a company and it kind of taints it, all right? And other people get worried and the stock market, can be irrational and stuff like that. And for the most part, people follow what everyone does, okay? So if a big name investor, now let's just say Carl Icahn, I'm just throwing his name out there, but say he decides to invest in a company, okay? And he invests on, say, whatever, day one, and now the stock's gone public, the share lockup is over, and he decides to sell instantly, okay? Now, he may just choose to take his money, he may not sell for too many reasons, but to the outsiders, you, me, and everyone else, it does look suspicious, and people tend to follow that, so just be cautious of that. Anyways, hope you enjoyed this video talking about IPOs. Let me know what you think about IPOs. Do you buy IPOs? Do you trade IPOs? Did you buy the Lyft IPO? Anything like that? Your experience with IPOs? Comment down in that comment section and let me know. Also, if you enjoyed this video, let me know what you thought about this video. If you got any ideas for me to make a video on something, shout it out down in the comment section with an exclamation mark, because why not? Anyways, until next time, see you later. Have an absolutely fantastic, amazing, beautiful day, and I'll see you next time.